Is this the beginning of the end of the property downturn? Or maybe it's the end of the beginning, because there are multiple signs that the property markets are now looking for a floor, with rising auction clearance rates and asking prices not falling. And there are other signs that I discuss in our regular Property Insiders chat with Dr. Andrew Wilson this week. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. There's no doubt that the Reserve Bank's shock and awe package of interest rate hikes, which started in May this year, knocked the confidence out of our housing markets. But over the last little while, there have been multiple signs that we've passed the days of peak fear and both buyer and seller confidence is returning. Now, this is showing up in stronger auction clearance results, as well as the fact that asking prices are no longer falling. And it's also showing up in other indices, such as the amount vendors need to discount their prices if they want to sell their properties, and how long it's taking to sell a property. Now, while there's no doubt that some market indices are lagging and they're reporting things that happened a month or two or even longer ago, and they're still going to be falling for some time, there are many indications that our property markets are looking for a floor. So I'm looking forward to my weekly Property Insider chat with Dr. Andrew Wilson to talk about some of the latest data which is showing what's happening in real time. Hi, Andrew.
Good morning, Michael, and it's good to be here. Of course, we've now come to the end of October, so there's the first 2 months of the spring selling season have now passed. We can certainly gives us a clear picture of what's happening in our housing markets, and it's inarguable, Michael, that housing markets are reviving. It's not just the auction clearance rates that have picked up consistently again through October, but it is other measures. As you mentioned, asking prices for established houses are improving. We've even seen sale prices, monthly sale price data improving. Days on market is improving. And I think that really tells us that confidence is improving, Michael, as well. And why should we be surprised, given we have a booming economy and one of the lowest unemployment rates on record? People are out there, they have a job if they want a job, and wages are rising. So people are feeling pretty good about themselves, notwithstanding those higher interest rates, which I think consumers are generally shrugging off. We're still seeing retail sales rising and remain at very high levels. So people are out there spending, and why wouldn't they if they're getting a bigger wage and they've got plenty of employers chasing them down to come and work for them? Why wouldn't they be getting on with life? And that means buying and selling property. And I think also that perhaps consumers are getting a little bit tired of the doom and gloom headlines and narrative that's really bombarded us from the media over the last few years. The one consistency about those predictions of doom and gloom in terms of the housing market is the fact that they're always wrong, Michael. And it looks like we're already starting to see backtracking from those that were predicting cataclysmic falls in house prices. They're all starting now to think about wavering. And I don't think it'll be too long before we see a significant revision in those extraordinary predictions of house price crashes. But the data is all that we talk about here, Michael, and the data certainly supports that, particularly the Melbourne housing markets, which of course led the charge downwards once we did have higher rates. But a lot of that came from booming house prices last year in those two cities, which did impact affordability. But yes, Melbourne and Sydney led the market downwards through winter. But now, particularly the Sydney market, looks to be leading markets upwards through spring. And as we normally do, Michael, we look at auction clearance rates as a key indicator. So perhaps we can look at that in a little bit more depth today, just to understand how housing markets are tracking, particularly Melbourne and Sydney, in more of a real-time environment. And how certainly it looks to be that buyers and seller confidence is rising.
Well, real time is the accurate word, because most property market indices tend to lag. In other words, they wait for sales to occur and then they eventually get reported and then they get collated and they come out in the media at the end of the month. And more recently, one of the large portals brought out the quarterly report, but that's looking back 3 months ago when we've had a number of interest rate rises, when the world has changed so much. So I agree with you. In time indices make more sense, and asking prices, which you've just released for the end of the month of October, are a good indication of how vendors feel about putting their properties on the market, and they do give a really good indication of what sale prices are going to be down the track. So let's quickly recap your October end of month asking price indices.
Well, again, Michael, it was an across the board improvement on the September results. The Sydney market, no surprise, was the underperformer in terms of changes in both houses and units over October. The Sydney market for houses was flat, but that was an improvement on the fall of minus 0.5% over September. Other markets, by and large, were just above the line for both houses and units. But no surprise, the Adelaide market continues to produce higher asking prices for established houses and units. But again, as you mentioned, Michael, we can correlate the strength of the Adelaide market by just looking at those weekend auction clearance rates. And Adelaide consistently produces auction clearance rates every weekend around about above 80%. And that, of course, is a very strong result. So we shouldn't be surprised that we're still seeing other indications of a strong housing market in Adelaide. And again, those monthly asking prices give us another sense, together with other more timely measures such as auction clearance rates, as to where our markets are heading. And there's no doubt that the asking price data has improved, and that again follows other data sets such as auction clearance rates, house prices, and days on market.
Clearly, the important part of the data is looking at the trends, not just the specific asking prices or auction clearance rates. But first of all, Andrew, let's look at what happened to our auction markets over the last weekend, and then let's go into My Housing Markets data of the trends for the auction clearance rates over the last couple of months.
Michael, and of course, it was another interesting weekend in terms of auction clearance rates. The Sydney market produced some remarkable results. Firstly, we saw a bounce back in the number of listings in the Sydney market, which has been a little quiet over the last few weekends. But we had a 10% increase in listings, over 600. So that's a good choice there for buyers in the Sydney market. But despite that 10% lift in the number of properties offered for sale, we had another higher clearance rate in the Sydney market. Clearance rate of 67.7%, Michael, despite those higher listings. That's the highest clearance rate in the Sydney market recorded since May, Michael. Clearly, that market is becoming up and about. And I think that, as we've mentioned before, Michael, once we start pushing towards 70% weekend clearance rates, we are moving out of that neutral zone. And the neutral zone is between 65 and 70%, where prices are sort of neither up nor down. They're flat, maybe a little down, maybe a little up. Of course, we're dealing with a lot of different parts of the market. But once we do get to 70%, it does start to morph itself into a seller's market. Of course, it has been a buyer's market over winter, particularly given that buyers and sellers have been sitting on their hands through perhaps some wariness, given all the negative headlines and higher interest rates. But now we're certainly seeing the Sydney market, in a sense, leading markets upwards through spring. Pushing towards 70%. The offset, of course, is we're now 2 months into spring. We've got about 6 weeks left in the auction season till it closes out for the holidays. And we typically see through the back end of the spring selling season into December more stock in the marketplace, and that tends to push clearance rates downwards. So we've got that typical seasonal effect of higher stock numbers and lower clearance rates, regardless of the cycle, that may impact our markets going forward. Of course, it's the Melbourne Cup long weekend holiday in Melbourne. I guess we call it a long weekend, Michael. It goes to the Tuesday. And Melbourne, obviously, following last weekend's Super Saturday of results, didn't have anywhere near as many auctions. Of course, agents avoid the clash with the long weekend. But nonetheless, there was still a reasonable number of auctions offered, Michael. Melbourne's clearance rate still maintained its position above 60%, despite all those holiday distractions. And typically when we do have the holiday period, the middle and higher parts of the market tend to be the ones where we see fewer listings from. So it's a bit of a patchwork market, but still a 60+% clearance rate, I think, is a positive sign for what's been a very consistent market in Melbourne, even through the doom and gloom period of winter. Brisbane, it had a rise in listings number. In fact, one of the biggest numbers we've seen out of Brisbane for a while. Perhaps not surprisingly, that Brisbane market just tracked backwards slightly compared to the previous weekend. Similarly, in Adelaide, more auction listings, and that put some downward pressure on its clearance rates, but they still remained around about that 80% mark. And Canberra, again, with a big lift in its listings, its clearance rate actually increased. And I think the Canberra market catches a little bit of that Sydney energy, if you know what I mean. It's a market that tends to follow the Sydney market, and it was late to, I guess, start its correction environment. It's a little later now to start its revival, but revival looks like it's now occurring in that Canberra market. So once again, Michael, our auction clearance rates are, in absolute terms, what happened on the weekend are certainly showing some positivity about the results going forward. And it will certainly be a very interesting month coming up if we do see those seasonal effects with higher listing numbers start to impact what is clearly a reviving housing market. And as we've said before, not just on the trends from auction clearance rates, but other measures as well.
Okay, so auction clearance rates are on the up, and the trends are pointing to about 60, even up to 70% of buyers and sellers coming to an agreement on the day. But how do the auction clearance trends relate to what eventually happens to house prices, Andrew?
Well, when we look at the trend data charts, Michael, it's clear we can see what the ups and downs of the cycle over recent years, but certainly this year what we're interested in. And you can see that there's no doubt that when we look at the monthly trend of those weekend auction clearance rates in Sydney and Melbourne, that we have seen a lift in the trend from the middle of the year. We can see quite clearly now that both Melbourne and Sydney are in that revival mode. Interestingly, Sydney has revived quicker, and you can see that the slope of the trend is certainly higher over the past couple of months in Sydney compared to Melbourne. But Melbourne's come from, I guess you'd say, a higher base. In other words, it didn't fall as low as Sydney, but it's been more consistent. So it's been a bit of the great survivor, I'd say. And we can see on those monthly trends for the weekend results, a clear upswing in our auction clearance rate trends for both Melbourne and Sydney. And again, we keep reiterating that this is just another consolidation of other data sets that are showing the same positive trend in housing market activity over the past couple of months. And I think we can support our auction clearance data in terms of its reliability from what we see in house price changes. When we look at the long-term quarterly auction clearance rate data for both Melbourne and Sydney, and we compare it with what happens with house prices, we can clearly see that there is a strong relationship between what happens with auction clearance rates and what happens with house prices. Higher clearance rates, higher house prices, lower clearance rates, lower house prices. So that's why we do use the auction clearance rate data, Michael, to give us those real-time insights into what's happening in the housing market, because they actually work, So, and I think what's interesting when we look at those longer-term trends with auction clearance rates and prices, we know that back in 2018, Michael, we were going through a similar period of fragile buyer and seller confidence. There were similar ridiculous predictions, as they turned out to be, of house price crashes happening in 2019. By geez, were they so far wrong. But we've had those again, which we saw through COVID, those silly predictions of house price crashes. And that has infected, as it always does, because it's captured by the media. It has affected buyer and seller confidence. So I think it's interesting to compare where we are now in terms of our auction clearance rates and where we were back in 2018 at the same period. And you can see quite clearly, Michael, when we compare the quarterly data, this is September quarter data, the latest data for house prices, to the September quarter clearance rates, that we've tracked consistently higher in Melbourne and Sydney than where we were back in 2018. In fact, in 2018, our clearance rates pushed down to the 40% by the end of the year. We're in the low 40%. So that's when we had our record decline in national house prices on a calendar year basis. We saw national house prices fall by 5.5% over 2018. And that is the record in the modern era. We're probably not going to reach that record this year. And of course, the national house price is just a conglomeration of what happens in each of the capital cities, but it is skewed, obviously, in terms of a weighted average towards the big capitals of Melbourne and Sydney. So it really just tells us what's happening in Melbourne and Sydney. And I think finally, when we do look at the monthly auction clearance rates for Melbourne and Sydney, since our market started to have its shakeout period, which was May, of course, when those interest rate increases came through, first interest rate increases 10 years, and we could see at auction clearance rates did start to fall, but we can see quite clearly with the trends rising on the monthly weekend auction clearance rate results that there has been a revival in both Melbourne and Sydney up to October. And what we can see when we compare October this year, 2022, with October clearance rates in 2018, that we are significantly higher. In fact, the auction clearance rate in Sydney in 2018 in October was 50.4%. And in Melbourne, it was 50.1%. And now we're, in the mid to higher 60s overall for October clearance rate. So I think that really shows us the difference between the two market environments, that this is really an easing in house price activity, primarily, of course, due to higher rates in the shorter term, but really due to what was extraordinary growth in prices last year, creating those affordability barriers. But we are an undersupplied housing market, Michael. We have a booming economy, wages are rising, lowest unemployment rate on record. So why is there a surprise that our housing markets have shaken off all the negativity and the doom and gloom and are getting on with business? And we're seeing what are quite reasonable auction clearance rates on the rise through the spring selling season.
Well, there's no doubt that some price indices are still going to show further declines for some time, and the media is going to want to keep reporting those. But I can see that the media message is going to change over the next little while because the facts are changing. And this is a great opportunity for those looking to buy a home or an investment property, a window of opportunity before the general media and I guess the general population realise what's happening. Because there are two markets out there. There's the one that the media tells us about and that most people feel is going on. And then there's what's really happening on the ground. And there's always a lag, isn't there, Andrew?
Yes, and I'm not so sure that buyer's market will be lasting for much longer, Michael.
Well, we'll be looking forward to catching up again next week and having a chat about what's actually happening. Thanks, Andrew.
Thanks, Michael.